How do I pay off my mortgage in 7 years? That's what we're talking about today on the eCentral Business Show. I'm John Naylor. I'm joined by our resident expert mortgage broker, Laura Sillano.
Good morning.
Now, are we doing any advice today?
No.
Okay. So
disclaimer at the end. Yeah.
I was going to have to jump in and do it. Okay. No, okay, we've got that rapport thing happening at least in this video. We're having fun. Now, paying off a property in 7 years. How do you get that done? I want it. Everybody wants it.
Everyone wants it. There's only one way to pay off a mortgage in 7 years. The standard, well, let me retract from that. The standard mortgage term is normally 30 years. That's the standard that we default to when we're getting people loans. To pay it off in 7 years, the only way to do it is to put more money in it. It's simple. That's it.
Okay.
Sorry. And you know,
we see these offers online. Yeah. There's always that clickbaiting stuff going on, and there's always people baiting you up. It's like pay off for property in 7 years, you know. So you think, oh, you hover the mouse over and think, oh, there's an answer there.
Yeah.
But you're saying it's no secret.
It's no secret. You just got to put more money in it, and you can do that in one of two ways. You can either put in more capital, where you've sold an asset and you pay it down in chunks.
Yes.
Or you direct more of your available cash flow into the mortgage because you're committed to getting it down sooner.
Yeah, okay.
So if you're looking at putting more money into the mortgage through a cash flow solution, then it's either you increase your income to have more available cash to put in there, or you reduce your expenses to have more available cash to put in there.
Okay.
That's pretty much it.
So that's it. So in terms of trends, and obviously this isn't advice, but in terms of trends, what do you normally find people do on as a trend in terms of, because I mean, we don't go out and sell stuff, assets, you know, cars, boats, children, you know, we don't go out and do things to just generally, it doesn't happen that frequently, I take it. It's more going to be more frequently cash flow, is it not? Yeah,
most people would probably go down the cash flow route. And so the things that you can do there is you can be reviewing your interest rate to see, is it still competitive with the market? You know, because if the market rate for you is around 4% and you're paying 4.7, then there's a savings that can be made there potentially through a refinance. You know, also looking at your living expenses and going, you know, where are the things that are a bit of an indulgence that aren't going to help me achieve my goals. So if your goal is to pay down the mortgage more quickly, then you need to create habits around achieving that goal.
Yeah. I mean, it seems for me, you know, to be transparent, I mean, it almost seems as though for myself, I'd have to ring the bank and say, take larger repayments out of my account, you know, or that's forced me into it, you know. I mean, do you see that happen? People shorten the term or contact their bank and have it step up their repayments? Yeah,
you can. Just because we default to a 30-year term doesn't mean that you have to take a 30-year term. If your income is at a level where you can take a 15-year term, then you can choose to do that. The only thing that I would say about that is that contracted payment is going to limit your options later on. If your circumstances change where you actually need to reduce your payments for a little bit, you won't be able to do that if you're in a contracted shorter term.
Oh, that's true.
But you can still achieve the same net outcome, i.e. pay it off more quickly, if you pretend that you're in that shorter contracted term and go, the repayments on my loan, contracted payments on my loan are $2,000 a month, I'm going to put in $3,000 a month.
Oh, I've tried to trick myself a couple of times, Laura. It hasn't really worked. But I take on board. There's probably people out there with much stronger willpower than me, I guess.
The other thing that you can do as well is you can set up your loan so that you can you restrict access to money. So say, for example, one thing that you might do is you might go, okay, something that will support the discipline that I need. The loan structure you might look at putting in a portion that's a fixed rate and then putting the extra into that fixed rate, because it's a lot harder to get the money out of the fixed rate than it is out of a variable rate loan. You might have it so that you're putting the money into redraw rather than into an offset account, which has a lot easier access to it than the redraw facility would.
Yes, okay. So it would be like, even if there was like a week delay on your ability to draw down money, but okay, we don't see a lot of that going around. Now, how about actually the process? And you know, I read recently the Barefoot Investor says ring your mortgage retention centre. You know, the bank to ask for that, demand a lower rate. I've started calling them monthly, Laura. I've got a personal relationship with those guys. I mean, do you recommend that? It kicked a goal initially, but now they're sort of entertained by my monthly phone calls.
Yeah. I think you can. I don't know whether doing it monthly is probably a good use of your time. In our business, we review our clients regularly anyway, so probably every 12 months we tend to review our clients for their pricing or where their interest rate is at and go, okay, can we do better?
Yes.
And we'll submit the request without them knowing.
Okay.
And sometimes we get a result back that's like, yes, we've done heaps better, and sometimes we're like, nah, you can't get any more.
Okay.
But
you obviously get the joyous phone call you contact your client, say,
we've done this and it's going to save you this much per month.
Oh, wow.
The other thing that you can do is you can also do it yourself. Like you can call up the bank and just go, look, I want to see, I've seen these rates advertised around. Can you help me? I want to leave.
Yeah, okay. Well,
I don't know whether...
That's the one thing I'm trying. I don't have an address where I can always send flowers or coffees or cakes.
What are you talking about?
In terms of talking to the banks.
Okay. Can you bribe the mortgage retention people?
Or butter them up, I'd say. At least make friends with them, I'd say. Anyway.
Yeah.
Look, we're getting a bit off track there.
Yeah.
Look, so anyway, offset's obviously another thing in there as well, yeah?
Yeah. So if you're using an offset well, and you're putting all of your money into that offset, then that's going to help you achieve the goals as well, because it's every dollar that is in the offset account it saves the interest on that dollar in the loan account. So, a combination of having perhaps multiple offsets might help people in achieving their objectives as well. So they're putting their holiday savings and their discretionary expenditure savings into an offset environment as well as their everyday transactions, so that the whole lot is working hard to pay off the mortgage.
Yeah, I'm on board with that, absolutely, type thing. So obviously, this is part of a reason to have a conversation with a very good mortgage broker like yourself. Yeah. Now, how do people get in contact with Laura Sillano?
You can call me on mobile, that's 0422 320 497, or you can also email through to the office home at podfinancial.com.au.
Okay, fabulous. Okay, so there's no secret in terms of paying off your property in 7 years. Just get it and pay it off by the end of it. Anyway, that's enough done for today's episode of the eCentral Business Show. We'll speak to you next time.